The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 6th. That's right, the Turnaround Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next hour, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. And if you can't dial in, we've got you covered there too. You can let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, our Tigers, then any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 136 points. That's about 0.5% to the upside. S&P up 17 points. NASDAQ up 61. Leading the charge percentage-wise, that's 0.8% to the upside. Russell is up 2.5 points. Semis up 8. So it's mean and green. I won't call it mean, but I will call it green across the board. We get to the spot volatility index. That's going to be one of the areas that you're going to want to focus in on today. Currently, it's off by 11.5%, so it is now below the minus 10% threshold level. We look at both below negative 10% and above plus 10% out there. It's trading at $21.74, down $2.85. Gold is up $7.70, 007. Silver is up a nickel. Lightsweet Crew back a quarter. Leading the charge, the Upside Transdigm Group having one heck of a day, 14%, $66.60. Insulet Corp at 22.22, room 22, 222. It's up 18, nearly 19%. Mercado Libre up $20, nearly 4%. Google up 17, about 1.5%. So no questions in here just yet. Probably everybody wants to know, okay, what are the markets doing? So let's do this. Let's always step back, take a look at what the markets are doing. We did this yesterday. We always do this, but it's always good to have a good frame of mind, a good reference point. So here's the Dow Equity Futures contract. The reason to put this up here is because it so clearly articulates the consolidation pattern that we are in. We know that there has been no breakout inside the Dow. We're looking at the monthly time frame, which gives us a better, bigger, broader picture, so to speak. And it's really the body of the candle that is the essence of price. The wicks of the candle are nothing more than the extreme emotion that you see, like a temper tantrum. Maybe your grandkids or kids or whomever, maybe a friend or a spouse might even throw a temper tantrum every now and then. But it is the body of the candle that is truly the essence of price. You can see the consolidation, which is from about 23.2 to 26.8 would be the area that we'll call it. So we're in the consolidation. Hasn't busted the upside. It can, not guarantee, it can make its way all the way down to the bottom of that consolidation. We don't know. What we do know is we have previously seen a consolidation before. That was the 2014-15 consolidation pattern. What else do we know about the Dow Equity Futures contract, at least with regard to the move yesterday? Well, let's add one more decoration to this chart out here. Let's go ahead and add our horizontal trading ranges out here. Now, what are horizontal trading ranges? Well, primary trading ranges, in essence, which is what Bud Rolfs taught us, for those of you that are longtime dinners out there. What you're really trying to do, now I automated the process. Automated the process is actually different than Bud's work out there, because Bud would go ahead and he'd take his monthly levels, and those would also go over, and they would become at least the weekly and the daily time frames. And then on daily and weekly, he would have other lines in between that. For me, it's just pretty simple. I just use the work which says, hey, go out, take a look at this chart for the Dow Equity Futures contract. We're coming back to 2002. Identify the largest number of co-located opens or closes. Co-location means it doesn't matter whether it's an open or close. Find the largest grouping of that and begin that process. Look for the second grouping, and so on and so forth. Well, in doing that, what that does is it provides us with these prices are either they're always moving sideways between a range. We'll call it a horizontal trading range, and they're either moving from lower left to upper right or upper left to lower right. You got the picture out here. So if we take a look at what price actually did yesterday, Dow Equity Futures contract pulled right back to where it should have, which was the monthly horizontal trading range of 25,000 even Steven. Now, what price needed to do or needs to do if it's going to continue to move lower, it must bust through that support level. But so far, support has held. Okay, so we know that. So then what else do we know? So that's the monthly chart. What's going on a daily basis inside the markets out here? Well, even though you and I can't trade the New York Stock Exchange, that doesn't mean we don't pay attention to it, because there are some wonderful signals and wonderful tools that it can provide to you and I. And this is objective. This means we can turn off the boob tube. We don't have to listen to what other people are saying. I'm not even asking you to listen to me, other than just go back and go ahead and take these tools, do the work yourself, see what results it gets, and figure out how to add this to your toolbox. I wouldn't waste your time, quite frankly, with the energy of taking a look at this if I didn't think that it was valuable. It is extraordinarily valuable. So what we know about yesterday, and what I know, what you know, is that when that advanced decline oscillator reading, that's a difference. That's taking a look at the advanced decline line, but looking at the difference between its 19 and 39-day exponential moving average. When we take a look at that, what we know is when that's the advanced decline oscillator, gets up to plus 150, we really watch, because there can be these plus 150 failures. What happens if you get above 150? It promises the future higher prices are very likely to occur. Well, what happens when it gets to the minus 150 level? Well, there's your true oversold reading inside the New York Stock Exchange. Yesterday's reading got down to close to minus 250. It actually, and that's not the lowest, by the way, but it was like minus 223, something like that. Where was it? Minus 223 was the reading there. Well, look, when you get to those levels, you should anticipate some type of bounce or bottom out here, right? Some type of bounce or bottom. Well, what we have to do is we have to go take a look at that bottom panel, which is the spot volatility index, but it doesn't do us justice to look at it on this bottom panel. So I've got to move over to that next tool out here. And that next tool is taking a look at what was yesterday's one-day rate of change. Remember, we began the show, we said we're going to be paying attention to closing levels that are above plus 10% and closing readings below minus 10%. You're going to focus. Yesterday was above 10%. We're getting the normal, the natural bounce. If we get a minus 10% reading, below minus 10% or lower than that, you will get an initiation signal. You know, similar to the initiation signal back on June 4th out there. I don't know whether we're going to get that or not. Right now, we're at minus 11.55% out there. Pay attention to that number at day's end. If it's below minus 10%, you can expect a rally for at least 2 more days. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Now at 1:32. We'll come back to the general markets. Let's go to our first caller, and that is who do we got? We got on the line here. Shoot, it's where it's Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you today? Do we have Jim? I hope we have Jim.
Hey, how are you today, Steve?
I'm doing well. Yourself?
I'm doing okay. I'd like to know your opinion on gold and gold miners GDX, where you think gold miners might go.
Well, so let's take a look at the GDX. Here's what we know right now. We know that price is trading above the top of its daily profile. That's 28.41. Was a gap up yesterday. I would watch. So at this stage here, that's bullish. The only thing that could be bearish would be some type of gap down tomorrow, creating an island top. I'm not saying that's what's going to happen. I'm just saying that's what you would be looking for. But on the daily time frame chart, all looks well. On the weekly time frame chart, price is above the top of its weekly profile. That's 26.25. That looks good. On the monthly time frame chart, price is above the monthly as well as the quarterly profile. When we take a look at the monthly time frame chart, what this would be suggesting is that where resistance is at is this old bearish engulfing key reversal session. So the GDX's next area of resistance, and just taking a look at our charting tools out here, says 31.79. Now, if we go back and take a look at the weekly time frame chart, what we can also do out here, Jim, is we can put in an A to B equals CD pattern. The A point down here was September the 10th. The B point, or the week of February 18th, 2019 was the B point, and the C point looks like it's the week of April 29th. So we can see we are above the 1-to-1. There was no bearish reversal signal from a weekly standpoint out here. So it says you go to the 1-to-1.272. Well, in essence, we're above that, 28.31. So this would give us a target area of the 30.53. So there's two target areas we've got. 30.53 to 31.79. That is where price is likely headed to at this stage of the game. You do have price moving higher, doing with less relative energy on the daily time frame. We don't have to look at the gold contract right now. I can just share with you that it is doing the same. I don't have any type of counts, whether it's a TD setup count or a wave count out here inside the daily GDX. It's not shown on this chart, but we can do that real quickly out here, and we'll just see that we're going to have to cycle through this, I'm sure. Yeah, so the wave count that I've got it in is going to be number 5, price moving higher, doing less relative energy. So just watch for some type of bearish reversal candle, but otherwise you have to stay long at this stage here. That's what I see when I take a look at the GDX, daily, weekly,
okay.
monthly.
Does
that help? Does that help?
Good. I appreciate it. When is it good to be in the miners versus any other type of gold investment?
So if you go back and you take a look at moves, I don't have a chart that I can put on my screen right now for you easily, but if you go back and you take a look at a bottom in gold, and then when it tops out, so take a look at a nice run out there, and then go back and take a look at the GDX, that same starting point. What you will see is miners during bull runs, miners will outperform anywhere from 2 to 5 to 1 fold out there. So unless you are trading the futures and you're trading leverage out here, which of course you can trade leverage with the miners by trading things like Junior Nugget or the Nugget or what have you. But if you're just, for your general portfolio, any time you see some type of significant bottom and you're trading gold, you're better off being in the miners. It's just factual. And you go back and you can check that out and see that in play.
Okay. Well, I really appreciate it. Thank you.
Hey, you bet. Good to hear from you. That was Jim in Palm Harbor, and that was the GDX. Now, let's go back to the general markets out here and just try to put this together. And so what we were looking at here was we were looking at this chart. And this chart here shows you the days, blue arrows and green arrows. Blue arrows are the one-day rates of change above 10%. What you typically see is a bouncer bottom on the next session. How do you know which is which? Well, we don't really know until we can evaluate the following day. Right now, the rate of change in the spot volatility index is minus 12%, minus 12.08. The green arrows on this chart represent those types of days. Now, my experience in looking at the charts is that after you've had a nice pullback, which we have had, there's no doubt, and you get that initiation signal, we won't know if we do, again, a rate of change below minus 10%, that can be a bottom. It can be a serious bottom out there. So it could not be ruled out if, in fact, that's what we get. At a minimum, for example, if you come back to the prior signal out here on May 14th, you'll see that the market moved higher for a total of 3 days. That's why I said, okay, you can expect the next couple of days out here. That's typically what you would see. But oftentimes what you really get is you get a move higher. In fact, oftentimes it can be a move higher above the prior swing point out there. Yes, we're still in a consolidation. We are going to take this step one step at a time, 1 day at a time out there. The other element to be watching for is in that spot volatility index. Here, when you take a look at the data out here, you've got the spot at 2154. It is still above every single forward futures contract out there. That takes us out to April 2020. It tells us that right now what we've got is a short-term event out here. We don't have some type of huge volcanic activity that the spot volatility index is saying it's going to last for a long time out there. It's overdone. It's out of whack. It's got to get back into whack out here. And the way that it gets back into whack, typically, as you see the spot volatility index get back in line out there and starts getting below those futures contracts out here. So that is another indication to both you and I that there is this dislocation in a consolidation market, which we are in. They're hard to trade, but they're really, if we just do the things that you and I are doing out here, we take advantage of tools like the advanced client oscillator reading, and we go back and we understand what it means. We could take a look at Marty Zweig's work out here, and in Marty's work, for those of you that had followed him, historically, I like looking at his Zweig thrust indicator. Well, in order for that to begin, you've got to get down to below minus 0.40, and yesterday was minus 0.39. It's also looking at the advanced decline oscillator reading, but it's using a different set of measurement tools out here. But what I can share with you, it got down towards a level yesterday where it says you've got to be on the lookout for a potential bounce or bottom. Now, let's go back to the New York Stock Exchange. And going back to the New York Stock Exchange chart out here, what we don't know is there's really two ways that bottoms, significant bottoms, form inside the New York Stock Exchange. One is like the old being in a pool and taking that ball and trying to hold it down with your feet, but the ball always wins. It knocks you off your feet, so to speak, bounces up out of the air, nice big old bottom. That's one way. And at this stage here, yesterday can still qualify for that. The other way that it occurs out here, bottoms that is you end up seeing another thrush lower in price with a higher reading in that advanced decline oscillator. Those are the red diagonals on my advanced decline oscillator, panel number 2, with price moving lower out there. And we're always trying to put the bullish or bearish reversal candles together. So for those of you that are bears that think that the markets just only go down, they don't. Pay attention to the spot volatility index. That's the one thing that you need to watch at 4 p.m. today. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go to our next question. This one coming in from John in New York. John says, at what price would you buy VDE? VDE. V is in Victor, D is in Delaware, E is in Edward. That's the Vanguard Energy Index Fund. So if we take a look at this, Victor, let's just take a look at, John, let's take a look at what it is that we know out here. So currently trading below, currently trading below the daily, weekly profiles out here and trading into the bottom of its quarterly and monthly profiles. Those are at 76.30, 75.39 out there. So price may be pulling back to a area of support out there. Both the monthly and the quarterly are bullish structured profiles, meaning the center of those boxes are closer to the bottom than they are to the top. And so that says you should see strong support between 75.39 and 76.71. That may have answered your question for you. But I would go one step further. I would say, okay, but is there any kind of bottoming signal on a daily time frame out there? Well, I don't know. Let's go take a look at it. So let's pull over Stevie's other charts out here. Let's go take a look at it, and voila. Voila, you may be close. You may be closer to pay dirt or to that rainbow, that pot of gold, than further away from it. Now, why would we say that? We say it for two reasons out here. Number one, we can see that it's got that Rhodes momentum indicator signal that began yesterday out there. Now, the signal alone does not mean you go ahead and fire away. Instead, you want the cavalry. You want to see some type of bullish reversal candle. So, John, I would say you be patient and wait. Don't worry about trying to buy the bottom tick, because oftentimes if you try to buy the bottom tick, it becomes a ticking time bomb out there, and price continues to move lower. I don't want you to do that. Also, today is going to be day number 9 of the TD setup 9 count pattern out there. We know that on days 8, 9, or bars 8, 9, or the bar following 9, that can be an indication of a bottom out there. So maybe tomorrow you see a lower low. Don't fret. Maybe the Rhodes momentum indicator signal continues to move lower out there, and what you're looking for is some type of bullish reversal signal. Now, what if those don't identify a bottom? Well, then you've got the old A to B equals CD pattern out there that you would be looking at next. And that then would say, well, that gets you a price point of about 72.03 out there. That's going to be below the levels we were looking at, but that would be another potential pattern that is out there. So maybe close. There's no cigar just yet. I would continue to watch VDE and watch for some type of bullish reversal candle. From a weekly perspective out here, as I take a look at it, I don't have a bottoming signal. So you'd have to go with the fact that you're down at, or it's down near support on a monthly and on a quarterly basis, and look for a signal coming from the daily time frame chart out there, John. So I hope that helps you out, and best of luck with your potential trade inside of Vanguard Energy Index. I have no idea what's in it, what it correlates to, but that would be something else I would be looking at if I were you. Let's go to our next question that came in, and that's from Les. Les writes in LJ and says John Deere. So he says, "Hey Steve, can you check for a good area to buy Deere?" DE is the ticker symbol. So let me get over here. And I can see one of the problems I'm having with my other system. So it's going to be interesting. I'm going to have to deal with that after the show today. But you're looking for a buy area. And so as we take a look at John Deere, here's what we know, just looking at profiles. Below the daily, above the weekly, above the monthly, and below the quarterly. Okay, that's a mouthful. So what's this tell us? It tells us that our next level of support inside of John Deere, and any move lower, less is going to be 143.87. 143.87 is the top of that weekly profile. Any price move below that, you get strong support at 136.41. That's because both the weekly bottom and point of control, the center of the box, are priced at the same level, 136.41. You don't see that often, but when you do, tells us where you've got strong support. So that's one possible buy area. If we go take a look at the daily time frame chart here for John Deere, what else do we know? Well, yesterday on its move lower, what it did was it tested its prior breakout level. It did it to the T, and it bounced off of it. Now, it was 140.71. I don't actually want 147.71. Yesterday's actual low out here was 147.71. Are you kidding me? Les, how the heck does that work? You see, before you and I started using the TD setup 9 count, we would have said, both you and I know this, we would have said, you know where the breakout area was? was all the way down at the bottom, all the way down at the bottom in May out there. But no more. We don't do that. We have a tool that helps us to identify where price is broken out, where price has broken down, and we use it because it is so useful to us. So John Deere yesterday definitely came to a level of support. If it's going to go lower, it must close below 147.71. And then the next level of support, the next breakout area, would be 136.54 out there. So like the market, John Deere probably ought to bounce here for at least a couple of days, but price did tag support. If 4 or 5 days ago, Les, you had written into me, and we saw, of course, this Rhodes momentum indicator top, price moving higher, doing less relative energy, then we see that bearish engulfing candle out here. Both you and I would have known, and we said, okay, that's a top, where's price going to go? And you and I would have said, let's look at our daily profile, let's look at the bottom of that area, 163.54. If that doesn't hold it, price is going to go to 147.71, and that's the breakout area. Now, you don't like how it was hit. Volume was picking up a bit yesterday. But yesterday could have been a bottom. It's at least a temporary bottom as we speak right now. So, Les, I hope that helps you out. Watch that 147.71. If there's any close below that, watch for the 136 to 143 area. Thanks for taking the time to write in. Let's go to another question we've got here from Lee B. Lee says, can I get your opinion on IWM? I'm looking to go long to play the bounce for the next few days. So if we take a look at the IWM, out here. And you know I'm going to switch over to take a look at the Russell 2000 equity futures contract. But in just simply looking at the IWM, the same way that we do for other instruments, what do we know? Below the daily profile, it is trading right at the center of the weekly profile, or very close to it, 148.75. And it's trading very close to the center of the monthly profile, which is at 149.60. At 148.29. So with regard to playing the bounce, so to speak, for a couple of days, what is it that you're going to want to see inside the Russell 2000 at this stage of the game? Well, let's go take a look at a short-term time frame out here, Lee. What we don't know is, so what's transpired so far today, at least for the Russell 2000, I believe for the other equity futures contracts as well, is prices trading in between breakout area and breakdown area. So for the Russell 2000 on a 30-minute basis out here, you've got support, or you have support at 1459.20. So ideally, you're taking a long position, kind of like in John Deere. That would be the better area to make a buy from. I don't know that it's going to get down there, price that is. But price also hasn't taken out resistance. And resistance is 1508.10. You're at 1491. I'd be hard-pressed to say, and now's the time to fire away, knowing that you're closer to resistance than you are to support. You kind of see what I mean out here? Now, if price closes over 1508.10, it's got one more level to clear, which is 1518.10. So I don't know. Those are the numbers if you got a hankering for the Russell 2000. When we get back from this break, let's go see if we can get a hankering for the ES Mini and what it's got to do. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 189, S&P 24, NASDAQ up 84 points out here. So going back to our prior question from Lee, about, taking a look at trying to get in on a trade inside of the Russell 2000. We were looking at a 30-minute time frame chart, by the way, for the bottom panel out here, the Russell 2000. And so let me just kind of squeeze this in here. You'll see the green solid line, that 1508.10 level. That is a level of resistance. If price does close above that, really good indication that there is a breakout. That is where price broke down, and that is where it would give us at least on a short-term basis, a change in trend signal. And what would you expect? You put that together with what we're looking at. We don't know what the end of day reading is for the spot volatility index, but you know what it means depending on its close and then what to do out there. And you wouldn't take a short trade if all those things come together. Instead, you would anticipate that price is going to move higher. Well, inside the Dow Equity Futures contract, the number that you're watching there, hasn't gotten there yet, is 26,085. Now, this doesn't have to happen between now and the cash close or the contract close out there. It could happen overnight, but at least you would then know what's going on in the morning. Inside the NQ, the number that it needs to get above, let me pull this in here just a bit. I can't read it. Is 75.73. That's the number. It's the ES Mini right now that is the one that is testing its change in trend resistance line, and that's 28.71. We're trading at 28.69 as we speak right now. And so if price closes above that, you should anticipate that you're going to see a move up to 28.95.50. That's the other level of resistance that price would have to get above. And if it gets above that, it's moving higher. And it's at least moving higher, I would say, for the next couple of days. This just may be some nice counter trend rally to work off a very oversold condition. But it could also be a bottom of significance. And we're just going to have to take things one step at a time, one day at a time. So watch the numbers, 28.71. Watch the number, 75.73. That's the NQ. 26.085 in the Dow, and 15.0810. That's using a 30-minute time frame. If Lee had written in and he said, hey, I have a hankering to go long light sweet crude, then we would have brought over this chart. And then we would say, okay, you may be on to something here. Not saying take this trade. What I am saying is that 54.18 was its prior breakout area. It's trading at 54.18 right now. The bar that it's in, which doesn't complete for 15 more minutes, is going to be bar number 9 of a TD setup 9 count. Bar number 8, 9, the bar following 9 can be the place where there would be a turn. So you're going to get a bottoming signal pattern where price is pulled right back to support. It's just a 30-minute time frame, and price right now is trading between 54.18 and 55.40. But this TD setup 9 count is going to come into effect, and there's going to be another resistance line, and that's going to form up at the price of 55.14. If you can't bust them down, price will try to bust them up. That would say light sweet crude on its way to 55.14. But only if you're trading the contract would you take this trade. You wouldn't go into UCO or SCO. Based upon this short-term time frame chart out here, you'd have to go take a look at other time frames to try to guesstimate and figure out what is going on. So that is basically the show, folks. I don't know what else it is to cover. Now, let's go take a look and see what other questions we have out here. But really, I think in a nutshell, you've got what it is in order to make whatever trading decisions it is that you want to make out here. So Jim writes in, and Jim says, hey, Steve. Hello, Jim. A lot has been made in the news about China being a currency manipulator. What are your thoughts? Ooh, that is a tough question, isn't it? I was earlier doing a chart out here, a set of charts, currency-wise. So basically, you're asking me you're asking me an open-ended question, but some of those questions may be currency related. So let me switch over to my currency charts out here. Let me do this. First of all, I think you got a lot of blowhard information from a lot of media people and a lot of headlines and stuff that they can go sell as excuses or reasons why the market did what it did. That's the first thing that I think out here. With regard to the Chinese yuan, just to kind of, here's what it's doing. It's just a normal pattern. You're looking at the Chinese yuan in the chart pattern right here, and you can see a nice little rising trend. Price has done what it's supposed to do out here. Look, this chart the data over here on the left is basically as of when the U.S. dollar formed its bottom back in 45 quarters ago, 2008. And you've seen a 33% increase in that rate of change. Look at all these other currencies. Look at the Brazilian real, 140s. There's all kinds of floating currency manipulation. I just want to pull my hair out of my head, but I have a receding forehead, and so I don't pull the hair out of my head. Look, the U.S. dollar index is pulling back. It formed a nice top out here. If we take a look at the daily time frame chart and what price did today, here's the daily time frame chart. It forms a TD setup 9 count. It does it on bar number 8. That's after making a 1 to 1.272 A to B equals CD pattern. Once we knew that, we would say, where would price pull back to? Well, in the U.S. dollar index, we would have said 96.985. What's the low today? 96.980 out there. That's the breakout line. If the U.S. dollar index is going to pull back further, you're going to see it close below that, and then you could get a move down to 95.56. But price is done. It formed its top. Price now pulled back to the level where it most recently broke out. May just bottom from here. Currency manipulation, schmanipulation. It doesn't. There's a whole lot more that would have to go into even trying to answer that question out there, but you can just take a look at currency move. Look at the ruble out here, 178% move over the last 45 quarters out there. Hey, well, let's go to a caller. That's John in Philly, who's calling to talk about the gold contract. John, thanks for calling. Thanks for holding. What do you have to say about currency manipulation?
Steve, I want to commend you. You have a very valuable personal skill, and that is to be able to get yourself all lathered up. That's very good. Just hang on to that, sir.
Okay, thanks. I appreciate that. So spray me off here, would you?
Yeah, no, your comments on the talk regarding market price moves, I would agree with totally. And when you just look at the facts, I think that's kind of the conclusion you have to come to. Anyway, Steve, I am calling in. You spoke with earlier caller on GDX.
Yes.
And I thank you for that. I wanted to ask if you could share your current data as it pertains to the gold futures contract, and whether you're using the Dees Gold or some spot variant. I leave that to you. Just to let you know, Steve, back, I think that was the week of June 17th. That was the week then that gold broke above a 5-year trading range. And since that time, I've been of the view or speculating a bullish scenario was underway.
Yes,
and
we're just about to go to break. John, we're just about to go to the break.
The high that occurred back on July 18th.
John, if you can hear me, we're going to break, so just hold that thought till we come back for that 2-minute wrap-up. And we'll go ahead and finish your thought then, and I'll give you what information I can. Steve Rhodes with TFNN. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're on the line with John and Philly. We're taking a look at the gold contract, which is trading above its daily profiles, its weekly profiles, its monthly profiles, its quarterly profiles. It's trading above all kinds of resistance out there. John, go ahead and pick her up from there.
Okay, Steve, I'll make it quick here. My speculation is, unless we fall underneath that July 18th high, that this push the past 4 days is just the early phases of another rally phase that can extend from here another $50 to $100 higher. My question to you is, can you share with us what data you see that would suggest what support levels, if broken, would say that's wrong?
Sure. So to answer that question specifically, I would say we would have to go right to the daily set of profiles, and that's at 1398.20. That's the bottom of the box out there. That's what I would be looking for. As far as when you get above profile levels, which help us to identify support or resistance. In this case here, I'm looking at resistance. Then the only logical thing I can move to are the horizontal trading ranges. And so gold is up near its next one. That is a weekly level. That's at 1493.80. If price can close above that, then the next horizontal trading range becomes 1561. Above that becomes 1601. Support at this stage right now is the monthly horizontal trading range at 1462, with the weekly down at the 1426, kind of dyslexic. You just kind of reverse the 62 and the 26. So those would be support levels. Those are resistant levels out there. The only thing to be watching for gold is moving higher. You're doing it with less relative energy. Hence, you've got the Rhodes momentum indicator signal. There's some type of bearish reversal candle. It would suggest that price would pull back to support. The support I would be using most likely would be the daily profile levels out there. But in a nutshell, that's what you've got when I take a look at Goldilocks and the different levels of support or resistance. All right, my friend?
Thanks, Steve. Appreciate it.
You bet. Have a great day. Folks, stay tuned. Another great hour is coming up next. Your friend and mine, David White. He's the best polar bear on the planet. After that, Tom O'Brien Show 3 to 5. I'll be back with you on Wonderful Wednesday. Watch that spot volatility index, one-day rate of change. It'll likely paint the way for tomorrow and the next day. We'll be right back. Bye.